So in today's video, it's price action versus indicators, right? So we're just going to be using these two charts to make conclusions and make our comparisons, right? So we are just mainly just for why you should prefer analyzing price action first before you add your indicators. So I just want to encourage you guys to have a price action point of view in each and every thing that you do first, right, before you add your indicators, right? So I've got about 5 reasons that price action is always going to beat indicators, the use of indicators, right? So in today's video, we're going with price action, and maybe in the next video, if you want me to make a video on indicators, why indicators are better than price action, you can just comment in the comment section down below if you want those reasons also, right? So first of all is with price action, the first reason is spotting a reversal is early. You can be able to spot a reversal much earlier, right? So what we basically mean over here is, let's say we got this over here, right? So let's take this for example over here, over here, right? We've got this support here. When it gets broken, it now acts as a resistance, right? So we spot this reversal, right? This reversal, right, earlier, because we already know that there's a flip zone over here, right? It's just it's just a horizontal line, right? It's just a zone. This zone over here, we'll be anticipating a reversal already, right? So with price action, you're marking out your support and resistance, your order blocks. You can be able to anticipate where a reversal might happen, right? And with indicators, you just have to wait for them to act, right? So let's take that same example. This was the 50 minutes, so let's go to the 15-minute time frame over here, right? So right over here, yeah, though this one, yeah, I think they worked almost hand in hand over here, right? They worked simultaneously, right? So this was the zone over here, right over here, right? Though if you are using the moving averages, that's why I love the moving averages. They are a little bit so like they're just moving trend lines, right? They're just dynamic trend lines. But if you are using this indicator window over here, let's take this for example over here, right? Let me just use the crosshair, right? I want the crosshair, damage, right? So over here, right, as you can see, when the market put back over here, right, the moving averages, I said they are just moving trend lines, right? I think I will remove them for the essence of this video, for you to understand what I mean over here, right? So right over here, when there's a pullback, right, when you're using this indicator window only, right, you're just waiting for this crossover to happen over here. And as you can see, when the crossover happened, right, it happened somewhere over here, right, and the market has already started moving when you get your confirmation, right? So it's somewhere over here, and you enter when there's already a pullback, right? So that essentially makes using the use of what indicators alone, right, especially those crossover indicators, right, it makes them a lot more lagging, right? It's way behind, right? So you are not able to spot a reversal. You don't even know when the reversal might happen, because you are waiting for this crossover, for this curve to form, and then the crossover, right? So you are not able to anticipate when the reversal might happen, right? Then for the second reason, I think I've already preempted on this. Indicators are lagging, right? Whereas with price action, it's just straight to the point, right? It's just almost one and the same thing with the first point. But with this, what I mean is, if you're using price action right over here, right, in this example over here, right, you're able to see that this is a doji formation, right? I'm able to enter over here, right, when there's this morning star formation over here, and you enter already, right, and you've already entered, you're already in that trade, right? And when you're using indicators over here, right, you have to wait until the crossover happens, right? So the indicators wait for the market to do what it's doing, then they react to what the market has already done. Whereas if you are using price action, you're able to see this candlestick is what candlestick I'm going to enter right now, unlike we have to wait for 30 minutes what you're seeing what the market is doing, but you are not yet able to enter, right? So this point is, so there's a difference between this point and the first point, because the first point we are saying that you, with price action, you are able to spot where the reversal will happen, but with this you're just watching this MACD histogram and you don't even know when the crossover will happen, when the reversal will happen. But with price action, you are able to mark out your resistance, your order blocks, so that you'll be able to see where the reversal might possibly occur, right? Then for the third point is that you get pinpoint entry free from pullbacks, right? So these are the entries that you are talking about, right? When you are using price action over here, right, you are getting what this pinpoint or entry, right? So we are just marking this area over here, right? This the resistance when it gets broken. Now we enter when this market pulls back to that area over here. So you got all these entries, they are respecting that, right? Unlike when you have to wait for this crossover to happen, right? As you can see, if you wait for the crossover to okay, you enter somewhere in here when the market is already ending and continuing going up, right? So if you are using price action, you get we can just call this getting sniper entries, right? To make things a little bit simpler, right? Then for the fourth reason is with price action you get accurate TP and stop loss levels, right? So let's check this for example over here, right? Since we are getting exact pinpoint entries, right? We know where the areas that we are interested in are, right? This correlates with the first point again, right? We know where the pinpoint entries are. We know when we're expecting our entries, when we're expecting our reversals, right? So if these areas get broken, right, we will be able to exit our trade immediately, right? Let's take this for example over here, right. So we are marking what this zone over here, right, and this, so like doji formation over here, right? So I'm using the wrong chart over here, right? So we're marking this point over here. We are either anticipating that the market will pull back here or this last red doji candle for our order blocks. If you want me to empty more on order blocks, just comment in the comment section down below, right? So as you can see, the market pulled back over here. So if these two areas get broken, maybe our stop loss will be somewhere over here, right? We already know where our stop loss is, right? But with indicators, you are not able to see where your stop loss is, right? So let's say we are selling over here, right? Since there's a resistance over here, there's a resistance over here. With indicators, you're not able to see where your potential stop loss levels will be, right? And with price action, you are able to get pinpoint because you know the areas that you are anticipating, right? And then for the last point, you are able to set limits for your price action, right? So let's say you are trading order blocks, right? Most people with will trade order blocks. Just set there. Let's say you are going out or to area where there's no network, right? You just say maybe right over here, you want to buy over here, right? You set your buy limit over here, right? And when the market pulls back to that area, it goes straight into profit with you. It does that trade for you, right? And that this is only possible because we know our potential entry points, right? And you set your stop loss and your TP levels, right? And with indicators, right, you are not sure, right? You don't know when this crossover will happen, when this crossover here will happen. So it's quite difficult for you to set what your limits because you are not sure when this crossover will happen, and that will eventually make you we have to watch the market. We have to stay the market all day in order for you to get those best entries, in order for you to get those entries, right? So that's why, essentially, why price action is a little bit better than indicators. And if you want a video on indicators, just comment in the comment section down below. And if you want to use this strategy, right, this strategy, I will leave a link in the comment section down below or in the description box down below or as a card. Just remind me in the comment section if I forget to leave that link, right? And if you are interested in that video.